Sup, y'all? What's going on? My name is Russ, and yeah, I'm coming to you live on Sunday night once again from the Dapper Dividends worldwide headquarters here in sunny, I guess sunny Chicagoland area. What's going on? Good to see all you in the chat. Jim, Pat, Steve, Eddie, Zach, Shamir, all you guys, bored retiree. Hopefully, you won't be too bored for the next hour. Let's try and make that a thing. Make it not happen for you to be bored because we'll be a little bit entertaining, I hope. So, guys, everybody, girls, ladies, binary folks, I'm not even quite sure what that means, but if that's you, hey, you do you. I love it. I have had quite the crazy week. It's been lots of work, couple nights of tornado warnings. Uh, I mean, just it's been stupid busy at my work, and I should have the right mind to tell my boss, look, you're really starting to cut in to my YouTube time, YouTube content creation with all this work you're throwing at me, all this overtime. I have almost 24 hours of overtime in 2 weeks. So for us, that's quite a bit. Um, hey, we got Mr. Ryan Williams in the chat, buddy. Thank you for swinging on by. And yeah, you guys may have seen I just want to say it right away. I missed the live stream with Haley Eich, which we're going to try and reschedule it for this coming Saturday. I was really looking forward to it. And if you guys follow the newsletter, you will know that had a little bit of an emergency go on. Just the craziest thing can happen. And you should always remember, if you get, again, the newsletter, sign up in the link below, that you should always expect the unexpected. And we just had such a stark reminder of that the craziest thing can happen. And just to put it short, Friday night, we had some strong thunderstorms pass through. We were in the basement again because the tornado sirens were going off. For those of you that live here in the Midwest, you know what I'm talking about. But yeah, big branch, neighbor across the way has a tree, dead as a doornail, big ass branch fell into the edge of our property. And I was planning on cutting the grass, doing some yard work. And I was like, you know what? The village is closed. It's on their property. It's from his side. Just anyway, it wasn't ours. So Jenna and I were going to go and just move the thing a little closer to the property line. And wouldn't you know it, the thing shifted, rolled back. One of the branches conked her right on the head, and quite terrifying for yours truly. Lost consciousness. Thankfully, like I said in the newsletter, dude, I've been with her for almost 23 years, and I've never slapped my wife until Saturday morning. It was crazy. I mean, I thought she was dead in my arms, and thankfully, she's going to be okay. Had a concussion, so she's still recovering from that. But it just is such a reminder to always expect the unexpected, because when the unexpected does happen, it is so quick and so sudden, and your life can change in an instant. So that's why they always say, man, you got to be thankful for today, for what you do have. And you can't look too far ahead in the future because you don't know if that future is going to be there. And as we always do say, you can never live in the past. You can never live in the present. True to form. You can never live in the past. You can never live in the future. You can only ever live in the present. And that's why they say everything that ever was and everything that ever will be is right here in the present. So with that being said, we're going to be okay. Missed the live stream with the lovely Miss Haley Eich, which we are going to try to hop on later. So thank you for all your well wishes. And with, look, Ryan just finished editing a video. That's the story of your life, buddy. You should put that on your tombstone. Here lies Ryan Williams, just finished editing a video. So with that being said, we're going to start with the news. Simply Safe Dividends, by the way, we're going to use their news feed starting with Monday and work up until, we'll go past it, and then I'll double back and we'll touch on the stock that I think, it may not be immediate, but just like the tornadoes we had here in the Chicagoland area, the conditions are ripe for a dividend cut. My spidey sense is tingling just a little bit. And as I always say, on stuff like dividend cuts, I hope to God I'm wrong. I really do. I don't want anybody to lose money in this thing that we do, whether your thing is swing trading penny stocks or dividend investing. I wish everybody the best and wish everybody would make money, but I just want to put it out there that this could be a potential dividend cut coming here sometime in the near future. So, with that being said, everybody, and I wasn't going to point it out, my Emperor Penguin haircut I got going on. So I take care of my own hair here. I've been getting a little crazy, cutting it too close to the top. So I'm growing it down a little bit, and it's going to be funny for a little while. So now you guys are in the know. And as we've stalled enough, let's share the screen for good old Simply Safe Dividends. And we'll make it bigger, and we'll do make it bigger, Uncle Russ. Oh my God, look at this. No, we're inspecting the screen. Oh, it's just another day at Dapper Dividends. So here we go. Here's the news. Okay, first off, we have, yes, the 10th. EPD. Do you invest in EPD? I invest in EPD. Enterprise raised their dividend 2% higher. They are now not a dividend aristocrat because they're not a member of the S&P 500, but we'll move through these a little quick. Always remember, you can pause the video if you want to read the little blurb they got here. They upgraded Abbott Laboratories Simply Safe dividend score to 90. If you don't know, AbbVie, ticker ABBV, spun out of Abbott Laboratories in, I want to say 2012, 13, 14, 12, I think it was. TransAlta, which I believe is a monthly dividend stock, is going to be acquired by TransAlta. TransAlta is acquiring TransAlta Renewables. So it's something that they had, I believe, ownership stake in that they may have externally managed, but now they're going to completely acquire it. That may not be completely accurate how I described it, so don't take that to the bank. They just refreshed their safety score of 45 on BTI. Dude, do you own BTI? You get that international exposure with an 8.5% dividend yield. We got Cummins. Cummins raised their dividend by 7%. That's their 14th consecutive year. Very, very good company, very good products. Walgreens is keeping their dividend flat for the first time since 2003. They've been raising it every July. That's Walgreens. Genuine Parts, they upgraded to 80, which is safe. We once upon a time owned Genuine Parts, GPC. Cardinal Health reiterated their, so what they do, all that this means, they refresh their outlook, is one person within Simply Safe Dividends manually reviewed. It's not an algorithm. They manually reviewed everything about Cardinal Health that they look at and reaffirmed their safety score. So that's one of the things that they charge a little bit more for, is that Simply Safe doesn't just give a algorithmic safety score. There are people, they're coming up with these numbers and doing their due diligence. So Duke Energy, which is an electric utility, raised their dividend 2%. So they're just gonna steady Eddie, regular utility. They're a government sanctioned monopoly for all intents and purposes, with an almost 4.5% dividend yield. Triple N, they raised that's their name, right? Triple N. I've looked at them years ago. Raised their dividend 2.7%, which is their 34th consecutive increase. And we're just about done. They refreshed their outlook on Iron Mountain. And JM Smucker, ticker SJM, raised their dividend 3.9% for their 22nd year. So you may have seen it as we go down here. This is the big bugaboo, and I think Walgreens has a very good likelihood of a dividend cut coming up in the near future. A couple things I want to show you. Might be too big here now. With good old Walgreens. Come on, baby. Work with me. So that dividend yield is sky high right now for Walgreens. 6.5, almost 6.6% pretty much. But again, they, Charles Walgreen in 1901. They don't look, I'm struggling because I listened to their earnings call and it was a lot. And I don't know if Darth is on. I can't see the chat right now. So apologies. I will get back in a second here and get caught up. And then we can touch on it. I'll throw out another few things, but one of the things that, like AT&T, before they cut, they froze their dividend, meaning they stopped raising it. Right here we see now officially that instead of, you go 1, 2, 3, 4 quarters, then a raise. No, they stopped doing that. So 1, 2, 3, 4. So the dividend, in my opinion, is officially frozen, which is a red flag. Not an immediate um, indication of a cut coming, but to me, it's like those storm clouds brewing here. When you got a cold front moving in and mixing with the warm front, and you got clouds starting to swirl, it may not develop into a tornado, but there is a very high likelihood that it will. So just something to keep an eye on. As you can see, that Walgreens dividend yield is currently 66% above the 5-year average. Again, this is a backward looking metric. This tells us nothing about the future, but it tells us that the market is nervous about Walgreens and what's going to happen. They're obviously at the low end of their 52-week range. And we'll just look at a couple quick ratios here. Again, feel free, go back, pause the screen. But their free cash flow payout ratio right now for the next 12 months is projected to be at 105%. And right now it's negative 202%. Why is it negative 202%? Well, they have negative 95 cents of free cash flow per share. That's the first time in a long time this has happened to Walgreens. It's expected to bounce back next year, but it's still not going to be enough to cover the current dividend payment. So those are a couple red flags. Earnings per share has been dropping. Earnings per share growth is negative the last couple years. Sales growth, 0%, not very good. They have been buying back a little bit of shares, 863 million outstanding, and total sales been kind of flattish since 2018. And I think there was one more metric that, free cash flow margin, 1%, meaning that $1 of every 100 coming in revenue is making it as free cash flow to that bottom line on the cash flow statement. Not very good. And net debt, 55%, not too bad. But here, a lot of you newer investors might not really know or understand the interest coverage ratio, but this 1.80 means that Walgreens has $1.80 of operating income to cover every $1 of interest expense, which is not very good. That is razor thin, in my opinion. So Walgreens, that's the whole thing. That's the whole shebang right there. And I don't know if it's going to go back far enough here for AT&T, but yeah, so they had been raising it like a penny per year for a while, and then they stopped at 52 cents, and it was just for many, many quarters they had it at 52 cents. So that was kind of a worrisome thing, and then they cut it. So let me get to the comments and see what all you beautiful people are saying. You're all beautiful because you are all here. I really do enjoy and appreciate having you guys here. So with that, and if Mr. Williams is still watching, I'm going to do my best here to get caught up. I'm just going to do the obligatory hello to everybody. Let me know what you think about Walgreens. What's been a big win for you this week? What was a big dividend investing win in your portfolio? Something, I don't even care. It could be anything, man. Life is so short and we're spending this time here together. So I want to just pop up on a couple of these real quick. Lucas, my buddy, what's going on, Lucas? Thinks that 3M. Oh, duh. I'm going back too far now. Okay. So this is my guy. He did get the one about them, about me talking about it. So I'm reading comments, jabber-jawing. Let's say hello to... Oh, Shamir had a tornado. Hey, buddy, dude, it sucks. Oh, and that's the other point I wanted to make for all of you. I'll tie anything almost into dividend investing. Having that tornado 8 miles from our house made me think if our house was leveled, even if my phone was destroyed, if my phone was sucked up in the tornado and deposited over yonder, dude, I'll get another one and I'll hook right back into Schwab. All my investments will be safe and sound at Schwab. So that's one more thing to think about over there. So yeah, guys, thanks for the well wishes. And here we go. Pat's going to be adding more Walgreens. Dude, I'd love to know, after we just talked about that, I think that Walgreens is very ripe. My spidey sense is tingling. Could be a little bit of indigestion. Could be too much sun from the whitewater rafting we did in Yorkville, Illinois today. But I'd love to know, Pat, why are you buying more Walgreens? If you listen to their earnings call, also Walgreens is cutting their store count, I think by 300 or 350. I know it's 150 in the US and I think 2 or 250 in the UK. They're still trying to sell Boots Alliance. I know they're adding another smaller component, pharmacy component. So it's just a weird time for me that they're in transition is what it feels like as Walgreens. And I don't think they know exactly where they're going. Could be wrong. Roz Brewer, interesting CEO. I wish her well. But what do we got about Hershey? Panic sell. Wait, who? Oh, had Hershey in his portfolio until recently. Shamir doing some consolidate. Yeah, do you guys do consolidating like I've been doing? If I had 7 shares of Hershey, I might be like, well, if I'm not adding now, I might as well lock in profit. Hey, what's up, Dresh? Dude, I don't think I saluted you guys for your time here. Dresh just got off the WBA train. You guys, I'd love to know your thoughts. Let me get caught up here and do, let's see. Yeah, my guy Ryan. I can't, dude. I'll drink to that. I cannot grow a mustache. Let's see. Yeah, I'm gonna have to audit Ryan's video, Dan, and check that out. It's a funny thing. Him and I talk about forcing ourselves to watch more YouTube because you get so busy, but you got to watch everybody, not just to support them, but also to see, so we could learn, All right. I am getting to, oh, interesting. Ryan would buy PSEC. That's what Prospect. I don't remember PSEC, but I know they're, okay. Yeah, I'm going to read. Let's see. All right, we got a nickname in the house. We got Dean Machine. Cool. Yeah, this is a good one. I think that 3M absolutely is up there with WBA for when I think of it, those are the 2 dividend stocks that I think are most primed for a cut. 3M, though, keeps giving those Toki pennon. What's a Toki pennon? Sounds like something that you need to use, some kind of new apparatus you're going to get down at the head shop to do your Toki pennon, 3M. Anyway, I think that they've been doing their token penny dividend increases for the last 3 years, almost 4, I think. And that just tells me they don't have a lot of confidence, but they want to keep that dividend king status. So they are going to do that. Covered calls on what? On let us know, Lala. What are you thinking about selling covered calls on? Yeah, Chris, I agree, man. And companies could turn things around, but as Warren Buffett says, it's just funny how we quote these people. I'm like, as our Lord and Savior Warren Buffett says, turnarounds, the problem with them is they rarely turn. I'm paraphrasing. That's not quote, chapter, and verse, so don't lock me in. Steve, they do have safe dividend safety scores, but I think that they also had a safe score on VF Corp, which owns Vans and JanSport, which is weird to say that because I had a JanSport backpack back in the 90s. Not a Little Black Backpack, which was a popular song by Stroke 9, also in the 90s, one-hit wonder. I know all this weird eclectic knowledge. That's some of this stuff. I don't know why it won't leave my brain. It's just in there. Lowe's has warehouses. That's an interesting one. Yeah, exactly. They can make some. Yeah, it's weird. You feel like they're profiting, but they're providing a service. That's the way I look at it. People might say like, it's disaster profiteering. Yes and no. They're making the materials ready. Now, I guess if they were gouging, that's a different attitude. No. Anyway, Mr. Zack Attack, what is STLD? That's not Stellantis, is it? I don't think it's Stellantis. What is STLD? I don't know. Dean, this is a different Dean Machine, I think, right? Any thoughts on material stocks beside LyondellBasell? Not really. I know that they can be very cyclical. I haven't dug into the materials that much. I think APD is a right Air Products. That's a material stock, is it, or is that? I think it is. Yeah, I really don't. I really don't. Lead cable stories, yeah, regarding Verizon and AT&T. I did briefly read that, and I just thought, oh no, this is just this is just more fuel to the fire. This is just more of a millstone around the neck of AT&T and Verizon. If they knew about it and they didn't remedy it, then there's going to be lawsuits, and that's their problem. That's their fault, and they should be punished for that. And that's going to eat into their earnings. That's going to eat into their profitability as a business if they have to remedy that. And if there's even litigation like 3M's going through. So it's just a rough time, man. My thoughts are I was hoping to get out around $21 a share from AT&T just because one thing I've learned about the telecom businesses like AT&T and Verizon is they are highly capital intensive. It takes a lot of money to run them. And also, it's highly competitive. So when you're in a very capital intensive industry, very competitive, and you have to pay out that dividend, that's less money to reinvest in the business. And I wonder if that's one of the reasons why uh, T-Mobile, ticker TMUS, has just crushed. If you pull up a total return chart, and I like doing total return because that's dividends reinvested into the stocks. If you pull up a total return chart, they're not even remotely close. T-Mobile has cleaned their clocks and they don't pay a dividend. So, okay. Look at this, my guy Cena. Watch Verizon, some growth. Yeah, it's going to be tough, man. And, I think they'll still be able to pay those dividends. I mean, I guess we could let me look real quick. Let's bring you all along, everybody, to the land one more time of Simply Safe Dividends land. And do that. Do this, do that. And we won't inspect the screen this time. So we're still on AT&T here. I wanted to see their free cash flow payout ratio. So this is interesting. Sorry if I'm making you sick. They're like, stop moving the screen, man. You're making me dizzy. I'm behind. Sorry, I have my phone pulling up next to me here, and I was like, oh my God, the screen's not showing. Anyway, free cash flow payout ratio for AT&T, 42%, which is really low. That's projected over the next 12 months. So I don't really think there's any problem with them or any danger of them cutting the dividend anytime soon. And yeah, so they got, look at it that way, $2 currently, last 12 months, $1.90 of free cash flow per share. And they are currently paying out $1.11 per share, so they can easily cover that dividend. And what about their debt? Sorry, pardon me as I slowly scroll. And if you ever want to pause this, just pause it and look at the numbers, blow it up, zoom in. 61% net debt. So right at that borderline of being almost too much for good old. I thought there was a go to the top button. All right, let me see Verizon. And then Verizon, let's check out their free cash flow payout ratio. Yeah, that's insane. 7.7% dividend yield. And they are not growing that dividend. Yeah, they increased it during the last recession. Interesting. Yeah, it's very slow dividend growth. I mean, a 3% 20-year CAGR. You got a higher starting yield, but not very good. So yeah, they're still growing it, but let me see their free cash flow payout ratio. Just look at that. Nutty. 72% above their 5-year average. I'm liking and squarely at the bottom of their 52-week low. 63%. Now that's interesting. I do remember this. They were at 104. Now they're at 84 free cash flow payout ratio. Again, we'd like to see that. They have 70. I feel more comfortable closer to 60 to give some wiggle room. But yeah, they project 63%. This is all guesstimate the next 12 months because Simply Safe Dividends, folks, doesn't have the financial statement data for the next 12 months for Verizon. If they did, that would be pretty impressive. Yeah, sales growth 1%. That's been dropping. Interestingly, they've been diluting shares a little. 4.20, 4.21 billion. So they've been diluting shareholders just a little bit. Yeah, margins compressing. Look at that. Return on invested capital. Yucky. Yeah, not net debt 66%. So they're close to AT&T. So very interesting. I would tread lightly with them, and I would think that I didn't stop sharing my screen. Yeah, I would think you'd have to be a big bull, long-term bull. Like, I mean, I don't know if you're going to buy these telcos, you're probably just going to have to just put them in the top drawer and forget about it and hope that people just start buying them again one day. Because right now there's just no demand for those shares. You can't even sell covered calls on them. It's just ridiculous. Okay, everybody. Joseph Gephardt. Hey, Joseph Gephardt, thank you for tuning into the Dapper Dividends program channel show here for you and your listening pleasure at this time in the world, in the history of our lives. So, yes, Ryan Williams, I would invite you on, but I'm a little lazy right now. Let me know. I don't know if you want. He had to, I knew he was going to do it. I knew it. If you guys haven't met How We Do It yet, that goes back. That's a throwback to my younger years. I'm sure my wife, I forget who does that. Not Boys to Men. This is how we do it, which is How We Do It. Nice guy, right? I can't remember who does it. I don't want to Google it. Somebody tell me. It'll give you guys something to do. Run to Google. I'm going to get caught up. Okay. Do I think 3M would have already cut their dividend if that was the plan? No, I don't, because I think they're treading water to see what shakes out, how much they're going to owe, and over what time period. With PFAS, the Forever Chemicals is kind of already in, was like, what, 13 billion, I think, over the next several years. But the earplugs, we've seen estimates up to $100 billion in lawsuits and settlements. If that's the case, it's not going to be all at once. It would be spread out likely over many years, a decade or more. But yeah, I think they're just waiting to get more clarity on that situation, which is why they're doing the penny a year token dividend increases. What did I call it? Togi pennin. Yeah. The penny token dividend increases, I think. Okay, let's see. Moving along. Anyone know leg has been dropping? I'm just thinking it's the broader market. I think the recession talk was self-fulfilling prophecy. Everybody hears a recession's coming. Everybody's mother says, "Little Jimmy, there's a recession coming." But we don't know that. It may be coming. So I think when everyone's thinking the recession's coming, people just start spending less money, making changes, shifting how we do it. And don't shift how we do it. He might not like that, and you might get the police called on you. So anyway, I think it's a kind of a self-fulfilling prophecy. So I think we've seen companies say that the retail, like the discretionary spending, has been down, meaning like TVs, couches, the things you don't need. Well, if you talk to my daughter, like, you need a new TV, you need a new cell phone. But for the rest of us, those things that you don't absolutely need is the discretionary items. Obviously, your foodstuffs is things that your staples, you need those things. So, oh, buddy, what's up, Bam? Dude, it wouldn't be a show without the Bamboozler swinging on by the channel on a Sunday night. I do appreciate that, man. Yeah, so let me know, like, what was a big dividend investing win in your portfolio this week? What's a big dividend payment you got? I want to hear it. I want to hear any milestones, anything you guys got to share. So I'm getting close to catching up. This is a thing. If you, going back to AT&T and Verizon, absolutely, it could turn into a PR nightmare. And I think it's a little under the rug right now, but let's see. Good thing, buddy. The token penny, you got to go to the doctor. As soon as you start getting that scratching, you start getting that itching, you got to go get the dandibiotics for the token penny. And what did we call it? Token penny. This is why we love doing these things. Mr. Williams and I were chit-chatting away, saying how it's kind of cool that like the faceless channels, we love you, God bless you, but they don't do these live streams where you can see us just goof up on stuff. You can hit us with things that we're like brain, like come on, cover me while I'm thinking. Yeah, so we just it's fun. I really do enjoy seeing you guys. Well, at least seeing your words on my screen. Obviously, I'm not seeing you like you're seeing me. So let's see what you have to say. Steel Dynamics. So I think what Board Retiree is, dude, I would love to talk to you about this. So right there, what he's talking about, the Magic Formula portfolio, I believe, right, is Joel Greenblatt's Magic portfolio, where he lists these stocks that have really high return on invested capital, return on capital, I think a high earnings yield, which is the inverse of price to earnings. Instead of dividing the price into earnings, you're dividing the earnings into price, kind of giving that earnings yield. And he has a couple really simple criteria, and he'll say these are good companies that are currently trading really cheap. And how do we know they're good companies? We know they're good companies because they have a really high return on their invested capital, meaning that they're well managed. So it's just a matter of time before they come back up. So, dude, that is interesting that Steel Dynamics was in, right? I'm assuming it was Magic Portfolio recommendation by Joel Greenblatt, which, by the way, everybody, is a free site. Just check out Magic Formula investing.com or just Joel Greenblatt Magic Formula, and that would be awesome. Hey, I love it, man. Ask those questions away. T or VZ? I'll answer this one in a second. I'm going to say it's AT&T for me right now, just because that payout ratio is lower and it's a little nerve-wracking, I guess, or not nerve-wracking, but concerning to see that Verizon was just over 100% just the other day. So that worries me. Hey, do any of you guys play the lottery? I've thought about doing an experiment of doing like $5 a week on scratch offs and keeping a spreadsheet. And then what I would do is if I won anything, I would buy more. So it would be like reinvesting the dividends. And then just seeing what happened with that. But I don't know. I'm not a lottery guy. The odds are against you in the long run. It's just, I don't know. I wouldn't. Steve, good one. CVS is indeed looking a little bit more solid. Everybody, I'm sorry. I know we need to get caught up here, but I want to pop this on the screen for you because I have indeed too thought, let me share all, because then we'll get actually I want to get an intrinsic value from Alpha Spread on CVS. All these tickers in my head swimming. Come on, there you go. 3.39% yield, dividend safety score of 90. I'll stop at some of the numbers if you guys want to go ahead and pause this later on, see what jumps out at me. Yeah, now this is interesting, everyone. Everyone, class, pay attention. They had not raised their dividend, and I remember this, not investing in them because they'd had no dividend growth for what, 1, 2, 3, 4. So about 4 years they had a flat dividend. I still have Steve's comment up there. It's not blocking anything. I'm going to hide your comment, Steve. Sorry, everybody. So look how quick that was. Snappy. 1 year dividend growth streak. Happy birthday, CVS. Yeah, so that doesn't look right. How do they have 1 year? They were at 50. Okay, so they're working on 2 years. Duh. That's duh. All right. Dividend yields 23% above their 5-year average. Low PE. Yeah, down to about $70 a share, way below the healthcare sector. Free cash flow payout ratio is projected to be 29%, but right now it's 17%. That's low. I mean, honestly, I know Walgreens has that almost 7% yield, but if you're nervous, I think I would not feel too shabby about rolling that money into CVS. Who did they buy? Not Aetna. I can't think of it. They bought a pharmaceutical company. Yeah, sales are going up. Shares outstanding. I think this increase right here was when they made that big acquisition. I think they brought in more money by dumping more shares on the market to acquire, which was smart because look, the earnings have, or the total sales, excuse me, has just kept going up and to the right. So looks like that was a good move. A couple more metrics here. Those, it's just okay. Nothing jumps out right there. Net debt 45%. ICR is a little bit low. So CVS looks interesting. And by the way, yeah, I was looking up Walgreens earlier. Alphaspread.com. This is, by the way, intrinsic value of 67 bucks. Worst case of 52. That might be a little optimistic, but let's get a base case on good old CVS Health Corp, which is going ex-dividend this week, by the way. Now that's crazy. If that may be a little optimistic. They give $170 base case. So take it for what it is. 136 on the worst. Could be 48% undervalued. And I want to see if the company has been buying any shares, though. We'll go here. Very interesting. Interesting. So there have been total of 244 sales, 34 buys, but CEO Karen Lynch, check that out, on May 3rd of 2023, bought 14,000 shares at an average price of $69.75. So let me pop myself back on here, say hi. That is very interesting because, we always say that it's nice to see the management on the inside buying their own stock. Now, they do receive restricted stock units, stock options, things like that, which a lot of stock options, if they don't have any skin in the game, that can be a bad thing because with stock options, there's only upside. There's really no downside. As if they own the shares, you're losing money. But if you have the stock options, and management teams could make really risky bets to try and hit price targets and really drive that share price higher in the short term at the sacrifice of the long term, then that can do damage to the long-term health of the company. But they get to exercise those shares, get them at the high price, and then sell them right away, dump them on the market. But when you see buys like that, which, okay, I haven't verified that was, but it looks like it might have been an open market buy. If anyone does know a good place, share it with us. Then that's a good thing because you buy stock for one reason. You think it's going to go up. You could sell it for a million reasons. Little Timmy needs braces, but hey, if you're buying it, you think it's going to go up. Okay, I need to get here and I need to get caught up. So I am going to apologize if I blow by any really important comments here. This is an interesting one. Dresh looking at, Comcast and Nexstar. I still like Nexstar. It's been going up. They're showing some college games now on the CW. Perry Sook, the CEO, is just really solid. He's the owner, founder of the company. Founder, I mean, he's a partial owner with the shares, obviously, but CEO and founder is what I was trying to say. Perry Sook, dude is always making deals, has deals with YouTube TV, deals with professional basketball, trying to just bring more onto the CW, which they acquired for basically nothing. They share a part of the revenue stream with where they acquired it from, and the rest of it is just there. So he's really trying to grow the CW. So yeah, Nexstar I think is really interesting. But yeah, Comcast looks very interesting too. And we were just at Universal Studios. Who's talked like that? All right. Let's see. Oh, dude, Pat, you're sticking with MPW, huh? Yeah, I did the video where I thought they were going to cut, but hey, they have not cut yet. And I've had, this is what happens when you have about 75 different thoughts all trying to rush their way into your mouth. I've not really kept up with MPW aside from when I looked at them a few months ago. So I'm not sure what's going on with them, but I wasn't comfortable with MPW and what was going on. I see Mr. Williams is hopping off, so let's all wish him well. Let's all wish him well in his editing. And yeah, I will get to that this week. By the way, I am going to record hopefully tomorrow night. I'm doing a very, very, very basic introduction to the financial statements, to the income statement, the balance sheet, and the cash flow statement, just to get your feet wet. Some of the main things to look at, just a very, very basic and brief overview for an absolute beginner. Had to redo the first script because I was starting to get in the weeds on like SG&A, selling general and administrative. And I was just like, you know what? This is going to be way over the heads of a lot of people. They're going to get bored. So I was like, I got to start over, do it again. So hopefully we're going to be a little bit more, yeah. Okay. Next, Puckman. Oh, dude. Sorry, I am trying to look at that little avatar. He plays hockey. Nice. My team's the Blackhawks. What's your team? Unloaded TNVZ. I'm going to get caught up here. I've been saying it. Did he really? I did not know that Mr. Beast did a lotto scratch off video. Dude, that is so cool. I'm going to have to check that out. All right. We got my guy Cody in the house. How far back am I? All right. I'm getting caught up. Thank you. I'm ready for earnings week. By the way, what'd you guys think of PepsiCo? I think it shows that they are not being as greedy as everyone says they are. As Hugh Johnston, the CFO, pointed out, that margins have pretty much risen with the commodity inflation. So they're saying it's all the productivity. It's all them being smarter and handling the money better internal productivity for the company. So yeah, definitely. Citizen of the Year, Cody, share your channel, your link, whatever you want to do in the comments. Realty income. Yeah, that was one of my big ones too. Jim, $79. That's nice, man. That's a nice. So, all right, let's see. Shamir's got J&J reporting this week. I love earnings week. You know, for those of you that are brand new that may be just tuning in, I would say don't get too high or too low based on quarterly earnings. What you want to do is, like when we were looking at Simply Save dividends, you want to look at everything in a year's time frame because there's cyclicality sectors, like Buffett and Berkshire have talked about with See's Candy. I think Warren has said for most of the year, for the first 3 quarters, See's looks awful. Looks like a terrible business, but it's that fourth quarter when you get Thanksgiving, you get maybe St. Nicholas Day. I don't know. Do you celebrate St. Nicholas Day? Not him too, that. So a lot of you may not know, but St. Nicholas was St. Nicholas's twin brother, and his parents weren't very imaginative people. So they named their kids St. Nicholas and St. Nicholas, whatever we said. Anyway, so going back to See's Candy, you got Thanksgiving, St. Nicholas Day, you have Christmas, and then people are buying for New Year's. So that month, like late November and December, See's makes a ton of money. So like Warren says, you got to look at these businesses year by year. You can't do it quarter by quarter because of some of the cyclicality and nature of the business. What is this? Oh, pharmacists in Southwest Florida, many Walgreens stores in Southwest Florida and West Virginia are dumpster fires. Interesting take, my man. Dean, yeah, hey there. You're across the border in Wisconsin, and you're Ryan's lean machine. Yeah, for those of you that don't know, Dapper Dividend's world headquarters, or did I say worldwide head? No, we got to be in the worldwide headquarters. That just sounds so much better than the world headquarters. So the Dapper Dividend's worldwide headquarters is situated just outside of Chicagoland. Yeah, J&J's been slugged. I think people are still worried about the lawsuits going on. And, it's kind of interesting. You just reminded me of something. They're spinning off the consumer health. 3M is spinning off their consumer health. Who else? I know I'm missing somebody else that spun off consumer. I think GE. Was it General Electric spun off something to do with consumer healthcare or medical? So I wonder if some of these are trying to do it because of like future litigation, maybe separating it from the main parent company. I don't know. All right, I'm working my way back to you. Hey, dude, that is very important. I did not know that. So we said that Walgreens is closing like 350 or 300 stores, and I didn't know that CVS is closing 900 over the next 3 years. That's interesting, and I wonder why. Let's see. Is Alpha Spread my site? Victor, I'm glad you asked because I use a smattering, to use a $10 fancy word, a smattering of Simply Safe Dividends, which I pay for, Seeking Alpha, which I am an affiliate for, and Alpha Spread. But I'm also starting to use, and I put it in the newsletter, is stockanalysis.com. Since you asked, let's see. I want to show you guys that too. We'll make it quick, Victor, just for you, mi amigo, amigo mio, right? That's how you say it. Just for you, Victor. Let's come on, everybody. Let's go on over to stockanalysis.com. So this is the main thing. This is all free, but mind you, I am not logged in. So this is all 100% free. But what I like about it, top gainers, losers, they're showing you quick market news. They have a newsletter right over here, which you can sign up for. Really bullet pointed. I just started getting it a week ago. Their IPOs and blah, blah, blah. But if you look at a company, we'll just throw PepsiCo, look suspiciously close to Yahoo right there, okay? Because I saw that and I was like, oh, this is Yahoo. I'm like, oh, wait, no, it's not. So they got the news for it, and just a lot of things. I think the news is fairly long. Full company profile. Just again, there you go. There's Hugh Johnston. I told you he was on Yahoo Finance. I haven't gone down this far. We got price targets. We're both learning here. Okay, and then it's just going to fill and populate with more news. But yeah, so with the financials, this is what I like. And this is all free, mind you, because if you see I'm not logged in, you get 10 years of data. So going all the way back to 2013, but from 2012 to 1994 is what they want to charge you for. So right here, you can get 10 years of financial data. They have the different ratios. So your PE ratio, I think they even have like free cash flow yield, dividend yield, just buyback ratio. It's a wealth of information for free. I haven't even really looked at statistics yet. They get your forecasts. It's just looking really nice. This payout ratio, I believe, is no, that's not the free cash. Maybe it is. I don't know. Anyway, so you get your dividend history going back many years. This is all about the company when they were founded, blah, blah, blah. Look at this. Can I click on that? 315,000 employees, which this is this is insane. I have never even gone this deep into it. Hey, now, I've got 315,000 employees working for me with PepsiCo. And yeah, it's just really, really got a little charting. So anyway, that is stockanalysis.com. Even they got everything for ETFs. So play around with it. Don't break it. But yeah, that's one site I've been using more and more. It looks really, really nice. So I don't know if I got to get caught up to you guys. So again, apologize if I skip off over you. Yeah, everyone is showing football these days. Yeah, ESPN. I worry that ESPN is a melting ice cube. They are not the powerhouse they once were. So that is interesting. Oh, I did see that, by the way. I want to let you know, board retiree, he did verify that was Joel Greenblatt's magic formula investing, which I've thought about that. Oh, dude, you can't have three teams. I got the Hawks. He's got the Pens, Panthers, and Bolts. Thank you for answering that just for my own self-indulgent fun. Tip ranks showing. So here's the thing. One little bit of pushback with strong buy is that analysts, it's much easier to recommend a buy because there are so many more people that are potential buyers, because if you recommend a sell, that's only going to speak really to the people I think that are holding it. And there's less potential sellers than buyers, right? Because the potential buyer is like everybody in the world that doesn't own CVS, and the potential sellers are just the whoever holds CVS. Duh. But that reminded me of that one chick. Dun, 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 dun. What's her name? Eilish, Billie Eilish, which my band, The Interrupters, did a fantabulous cover of Bad Guy. Fantastic. I love The Interrupters. Playing Riot Fest here in Chicago in September, by the way. Hey, Joey. Hey, what's up, Joey? He actually bought more VZT WBA. You know, buddy, that's where I'm hoping you're smarter than I am, because I've gotten in trouble, and I'm still at times getting in trouble averaging down on the wrong things. When the fundamentals are strong, but the market's pulling back, is a fantastic time. But when you're averaging down on something that deserves to be beaten down because things are kind of cloudy in the future, it could get ugly. But I hope you are indeed smarter than I am. Yeah, Kellogg's. Oh, that's right. They were going to be spinning off 3, I think, but the like cereals and snack maybe, and then like plant-based and something else. But I think they're combining the plant-based because there wasn't much demand for it. If I think that right, like I think Kellogg's owns Morningstar Farms potentially, things like that. So let's see. Good. Okay. Yes, I think they were joking too. It's probably not in people's best interest to eat candy. You get those crazy outlier old dudes. Like there was this old dude in old black dude in Austin, Texas, and what was his name? He lived to be like 114, and I think he had said one of his secrets was he has like a glass of whiskey every day, and then I think ice cream every day, and then occasionally, like once a week, he would have a cigar. Not very healthy at all, but just some people just have it in them. They're just not going to. Let's see. I made it. I got caught up with all you people. Finally. So let's tell me what are you buying this week? What, put it this way. Let's see if we can do this. What is at the top of your buy list for this coming week? I would like to know. Mine is still been Nexstar Media. I wish I would have bought more. I'm up to, I think I have it in the description below. If you click on my portfolios, it'll take you to my website, which I got to get around to fixing one day, dude. It is just bare bones. So it shows portfolios. There's 3 portfolios we share on the dividendtracker.com, and you can check that out. But I got 58 shares of Nexstar. Should have added more when it was in the 140s. I did sell things to consolidate into that, so at least I did that right. But let's see what you guys are buying. He's not singing again, is he? Chocolate Mike is the key to longevities. That dude, you scrambled my brain, Pat. Good job. Chocolate Mike is key to longevity. I'm like, dude, do you need help? All right, here we go. I love your buys. Looking for VOO, VYMSCHD, all ETF routes, all nothing wrong with that. And at times, I'm thinking that it's just easier that way. Kind of lazy, but not a lot of risk, you know. VOO and SCHD, very nice. Just started buying Nike. Yeah, that was one. Kind of kicking myself. I got close to buying some when we were around like, what, 85 a share. And I thought, you know, this might go into the 70s, and outsmarted myself. Should have done that. I love it, guys. Keep it coming. Patty, he's got J&J and EPD and a little Walgreens. Okay, I see you there with the Walgreens. Oh, RTX. Is that Raytheon, right? – It's Raytheon, I think. I'm not going to bring you guys along, but RTX. What do we got? Yeah, Raytheon. 2.45% yield. Okay, not bad. Milk. I didn't know. Okay, that's right. You're responding to, yeah, chocolate milk is the key to longevity. I was everybody like, okay, Pat's buying milk. Good, good, Pat. Where are you buying the milk at? What's your target price? Are you DCAing into that milk? You know? Oh, nice. Somebody asked me in the interview video I did with Pat. I saw a comment of a dude that was 60. I don't even think it wasn't you, Charles. I don't remember the name, but they said I'm 60 and I lost money with the fund advisors and it may be, is it too late for me? And I said, I don't think it's ever too late, but for somebody that needs a lot, that's older and needs more income now, you might want to go for higher yields. So you're not waiting to get that income. Like if you're buying Starbucks or something with a really high dividend growth, then you got a lot of years to start building that up. But I mentioned ARCC, Aries Capital, is one of those that you might want to go to. So I see you're 47. Dude, you're 2 years older than me. I love it, man. Someday, one thing that's funny when I'm talking to people that are slightly older than me and I look younger and they forget, they're like, someday when I'm really old, like 47, I hope to do this or that. And people get, my humor. Tommy, Morsh kid, as Cody calls it. Yeah, I'm gonna buy more SCHD. Kevin, hey, what's up, Kevin? What's going on, man? What's popping? Trying to beat the X states with $25 DCAing across the board. Cool. Look at this. Greg, nice Polak there. I say that in all lovingness because I am part Polish. I say you look it up. Well, you're going to look up. When I was 10, I was adopted by my stepfather, who's now estranged. Didn't get along with him, so the name's kind of like a bad tattoo. But Malcheski was I was going to say maiden name, and my brain's like, no, you don't have a maiden name, dummy. So, yeah, Malcheski was my birth name, and then I changed it. It's too late to change it back. Yeah, baby, let's get those milk futures going, right? Oh, by the way, Greg, I call him a Polak. I didn't even read his comment. He's going to give AbbVie a go this week. I think they're still strong. I was just talking with my mother-in-law, who's a nurse, that Humira is either on or hitting the patent cliff, meaning that they're going to lose the patent for one of their big drugs. Yeah, Shamir, let's do it, man. Let's buy some milk futures. I'd love it. Buy an ET. Nice energy transfer this week. ET. I loved ET when I was a kid. I saw it in the theater. I was very little. I think that came out 82 or 83. So I was probably like 5, I think. A couple parts were a little scary, but I liked ET, man. It was high tech for that time. Greg should have bought last week. Oh, yeah. AbbVie did go ex-dividend last week. Oh, well, I guess you have to wait till the next one. All right, here we go. Now my Polacks are going to be that's not offensive. Is that offensive? I don't know, because I've heard it my whole life. Growing up in Chicagoland. Hey, I'm a Polak here, growing up in Chicagoland. I'm doing the best I can. I'm eating my brats. I'm eating my deep dish pizza. We're watching the Cubs on WGN. Listen to Steve Dahl. I mean, it's just what I do. I'm a Polak from Chicago, but I'm also Czech. I'm Polish and Czech. I should just do the whole show that way. And that way, first time people, that way people can be like, the hell's wrong with this guy? Is he just a really big fan of the Blues Brothers? Anyway, I can see a few of you have jumped off, tailed off, and dove off the deep end. I guess we're in the deep end, right? We're at the end of, you know what, guys and girls, this just goes by so freaking quick for me. I look forward to it every week. And I don't know, maybe I should just do one where I bring on Harris or somebody and we just chat. There's just no topic. And I know it'll have really low replay value in the future, but It could be fun. It could be fun. Who was this? The jokes were off the hook. Oh, about being Polish. Yeah. Unfortunately, um, listen to the Cubs on WGN with Harry Carey, dude. Harry Carey was awesome. That makes me tear up. So, we're almost at the end here. I don't know when when I was growing up in the 80s, in the 1980s. Okay, mind you, if you didn't confuse, I'm not. My grandfather raised me, in that period when my dad, well, it sounds like Johnny Cat. My daddy left home when I was 3. My daddy left home before my first birthday, and my grandparents pretty much helped raise me until I was 10. But yeah, dude, summers with my grandpa in the yard when I was a little kid with Harry Carey on WGN radio, just the best, the best. And when we went to the Cubs game last and they did the 7th inning stretch, it was like some little tribute on the video board and they did it with Harry Carey. Dude, being there, like I'm almost tearing up now. It was so bittersweet because I had so many good memories growing up like that. So thanks, dude. Thanks for getting this guy, teared up at that stuff. So yeah, we'll probably wrap up there. Shamir, you did it again, man. It's those memories, and I hope you all have some very, very nice, bittersweet memories. And that right there, you know what that was you were just witnessing? Some of the best dividends of all are memories. If you make a good memory and spend money on a good memory, that thing will appreciate in value and it will pay dividends into the future when I'm old. Dude, I'm going to be 75 years old one day, and I will vividly remember summers in the yard in the mid 80s listening to WGN, the Cubs with my grandpa. And it's just always going to be such a freaking great memory that is just apparently gotten better, like dividends increasing in value. Memories do that. Yeah, dude, Harris is a Boricua. That didn't sound right at all. Boricua. Anyway, Charles, I don't know. Yeah, Harry Carey and Vin. Was that Vin Scully? That was a little bit before my time. Vin Scully from Dodgers, was it? Dodgers or Angels? Somewhere out there on the West Coast. Yeah, Jack Buck and Harry Brickhouse. Jack Brickhouse was another one here in Chicago. The hey, before Harry Carey, which I love Will Ferrell's Harry Carey. All right, we're just getting goofy here. We're completely I'll do one thing. Ask me any question you want. The first one that pops up, I'll take it, and then we'll get out of here. So first one to the keyboard, quickest to the key, whatever you want. Doesn't even have to be dividend investing. First one that pops up here. I'm going to put it on there. Jack Buck, yeah. Nobody? Nothing? First thing that comes to your mind. Anything at all. That's not sexual. I want to answer it. Yeah, not yet, Shamir. I want to answer a question. Stop rushing Pee-wee. We're going to get to Pee-wee. Don't worry. Phil Rizzuto. Well, somebody's got to have a question. Really? Is it just that too late on a Sunday night? I'll give it a few more minutes. I'll take one more sip of the agua for my buddy Harris. All right. There we go. So, Greg, you win. You win. Is next are still hold for me buying more? I'm holding. I'm going to be holding for a long time, but I think that I should buy more here because I think their intrinsic value is well into the 200s. But because they had been in the 160s not too long ago, I'm stubbornly waiting for 160s again. So I'm going to do that. And there you go. $800 and where I would just put it in to SCHD. I think it's going to be fine over the long term. I just read Playing with Fire, and I don't have any new ones yet. Do I know what a plank holder in the U.S. Navy is? Yeah, a plank holder is somebody that was on board. They were a member of ship's company when the ship was commissioned. So it's not a plank holder, it's a plank owner. And every time a plank owner leaves that duty station or that ship to be transferred to another one, They ring the bell, they say their name, and they say plank owner departing. It's a nice little fare off to them. I'm not buying Zim. I've never been to the commodity exchange. I've seen it. I have never been to it. And I am looking at doing options. I scared myself off because I had to pay $150 to buy that PepsiCo option back. And because I didn't want to pay the taxes on it anyway. So kind of taking a break from options right now. And okay. Oh, all right. I'm going to end it with that, Pat. Did you ask me what a plank owner is? Yeah. Yes. So, dude, yeah, Charles, I don't know much about the Army. Unfortunately, I was in the Navy. And Pat, dude, so salute to your dad for being in the World War II in the Navy during yeah. Oh, you're right. So he was a plank owner. So that means he was commissioned. I didn't know if you were testing me, if you were at like what it was. Yeah. So that's really cool. That means that your father was a member of the ship's company on the day that whatever ship he was a plank owner on was commissioned. So you're forever a plank owner. So, okay, everybody. Jim, oh, by the way, Jim, we've been emailing. He did some time in Iraq, met General Petraeus. I hope I'm not giving anything away here, but yeah, so cool. I love it, guys. Dude, thank you, everybody, for tuning in. I don't know why I'm doing this because we're done. Yeah, dude, guys, thank you so much. Hopefully, I'll have that video out. I'd love to know what you think of it. It's probably going to be a little later in the week, shooting for Wednesday, but we will see. And I don't know what else to say. I love you guys. You are all beautiful people. How do I know you're beautiful people? I know you're beautiful people because you're here watching this channel right now, this live stream. So again, thank you, everybody. Sincerely, it means the world to me that you hang out. So Pee-wee, take me out, baby.